understand, is also being live streamed on the Access Health CT website. So members of the public and interested stakeholders can also follow along with today's conversation. With that, I'll ask others. I think, Joanne, you introduced yourself. Tom, do you want to introduce yourself? And then we'll ask the Access Health staff team to make introductions.
So, Mr. Chair, I will just do a roll call if you allow me to do so.
Yes, of course.
Okay, Claudia Gualtieri, Chair.
Here.
Thank you. Matthew Brackman. Thomas McNeil.
Here.
Commissioner Andrea Barton-Reeves is not available. Designee for DPH Commissioner Miriam Milner.
Here.
Thank you. And yes, we do have a quorum, Mr. Chair.
Excellent. Thank you. With that, I'll also just say that we will have roll calls with several of the actions you can see on our agenda here today. Specifically, the third quarter budget report on operating will require a roll call vote. And then we have in item F, the proposed operating budget for FY 2026 will require a roll call vote. So we will take those as they come up in the agenda.
I believe at this point the senior leadership team will introduce themselves.
Good morning, all. This is James Michelle. Can you guys hear me? Okay,
we can, James.
Thank you much.
Good morning, Gina Walsh, Director of Operations, Access Health CT.
Good morning, Holly Zwick, Director of Finance, Access Health CT.
Good morning, Rebecca McClear, Director of Technical Operations and Analytics, Access Health CT.
Good morning, Susan Rich-By, Director of Legal and Governmental Affairs, Access Health CT.
Good morning, John Carbone, Director of Small Group Product Development and Broker Support.
Good morning, Glenn Jurgen, Director of Human Resources, Access Health CT.
All right, I think that brings us to public comments. We received no public comments in advance of today's meeting, nor did we receive any written comments. I will pause just to make sure there's no member of the public at this time that would seek recognition. Seeing none, I think we will move on to the next item on the agenda, which is the meeting minutes. Per previous discussion, I'd like to pen this until our additional board members can come, so we'll have a full set of voting members for approval of the November 14th minutes. So we will temporarily pass over this item and move over to the next, which is Holly will talk us through the FY 25 third quarter budgeting report. Holly?
Thank you, Chairman Gualtieri and members of the Finance Committee and their designees. I hope everyone's doing well. I'm Holly Zwick, Director of Finance. We can move forward with the next slide, Martine. Thank you so much. Today we will be discussing the fiscal year 2025 quarter 3 budget, as well as the proposed budget for fiscal year 2026. We're starting here with this slide, which shows a summary of our fiscal year 2025 third quarter budget versus actuals. So this is as of March 31st, 2025. Access Health is currently $1.3 million under budget, primarily due to timing. Our shared budget with DSS is approximately $522,000 over budget, and on a gross level, we remain under budget by nearly $793,000. The overage on the DSS side is attributable to rising labor costs in the call center and increased IT maintenance expenses. Thank you. Next slide, please. Here we provide a more detailed comparison of the fiscal year 2025 budget versus actuals as of March 31st. As you can see here on the revenue side, we are over budget, driven by stable interest rates and higher than projected assessment revenue. While we secured a $200,000 cybersecurity grant last quarter, the funding has not yet been received and is therefore not reflected in these figures. On the expense side, savings have been realized due to the timing of staff hiring and project initiation. Next slide, please. As you can see, the fiscal year 2025 operating budget as of Q3 is under budget by approximately $248,000, which will be going to the reserves. Next slide, please. This slide here shows the full year budget adjusted after 3 quarters in more detail. On the revenue side, we are over budget by approximately $755,000 after the 3rd quarter. We were awarded the cybersecurity grant for a little over $200,000. Interest income has increased as rates have remained steady, and calendar year 25 assessments are higher than projected. Moving on over to the expense side, we are below budget by just under $248,000, as mentioned earlier. We are seeing vacancy savings in salaries and fringe, and we're saving contractually as some of our contract work has been moved to IT enhancements. Equipment and maintenance increased due to higher costs for IT and system maintenance, and IT enhancements rose due to ICRA project work, or development and implementation. So combined with our revenue increase of $755,000 and the expense decrease of $248,000, we are expecting to put roughly $1 million in the reserves. Next slide, please. Our fiscal year 25 shared cost budget with DSS remains flat after the 3rd quarter. Next slide, please. Allow me to provide an update on our carry forward projects from fiscal year 24 to fiscal year 25. These projects were initiated and funded in fiscal year 24, but were not completed by the close of that fiscal year. All of them are on track to be finalized within budget by the end of the current fiscal year. We have 4 projects falling in this category that are nearing completion, as outlined in the table provided here. Do we have any questions on where we are with the budget as of March 31st, as after Q3 of fiscal year 25? Thank you.
I'm seeing none. Holly, This is Claudio, but overall, it sounds like very strong on revenue growth, which is very good, and very favorable on some of the savings, trying to streamline some of those contracting costs and coming in under budget there. Really also applaud Access Health for their continued work to try to make ICRA a very viable option for small employers and other employers who are trying to maximize the opportunities on the exchange while still offering quality healthcare products for their employees at a fair price. So I think this is a really strong update for Q3. Thank you.
Thank you, Mr. Gualtieri. Next slide, Martine. Thank you. This brings us to the investment report, which, as you know, we review a couple times each year. To briefly recap, the objective for Access Health exchange funds is to obtain the maximum rate of return while preserving the principal and providing immediate liquidity. Access Health invests in the state treasurer's short-term investment fund, also called STIF. This account is available for use by the state's funds and agencies, and state statutes authorize these pooled investment funds to be invested in U.S. government and agency obligations. These investment pools are under the control of the state treasurer. Thank you. Next slide, please. The year-to-date earnings on the STIF account are $882,212. Access Health CT's investment portfolio is in compliance with our investment policy, and we can meet our expenditure requirements for the next 9 months. Next slide, please. Our proposed fiscal year 26 operating budget emphasizes IT investments, outreach, and addressing health disparities, which are all aimed at advancing our mission to reduce the number of uninsured residents, improve the quality of healthcare, and reduce health disparities. Additionally, IT security remains a key priority and is an integral part of our daily operations. Next slide, please. Our fiscal year 26 proposed budget is projected to increase by approximately $4.4 million, which I will show in more detail in the next slides. Access Health's operating expenses are also expected to increase by $4.4 million, mostly driven by the new enrollment system, 10 clicks, ICRA, and on a smaller level salaries as we are converting some of our contractual staff to permanent. Our shared budget with DSS will increase by approximately $514,000. Next slide, please. For the fiscal year 26 proposed budget, we anticipate an increase of $150,000 in grant income, bringing the total to $250,000. This growth reflects our efforts to closely analyze the current grant landscape and actively engage both our internal and external stakeholders. We anticipate interest income to exceed the fiscal year 25 levels, as interest rates have not declined as quickly as we initially projected and are expected to remain stable for the foreseeable future. Conversely, other income is projected to decrease due to slightly lower rebates and the departure of several vendors who previously utilized credit card payments. Marketplace assessments are estimated to rise by approximately $4.2 million, reflecting the increased assessment of premium dollars under the current enhanced subsidies. The affordability of healthcare insurance, including the dental coverage, has led to more individuals obtaining insurance, thereby expanding the premium base subject to assessment. It's important to note that our actuarial forecast from Wakely this year showed a substantial decrease in revenue to Access Health if enhanced subsidies are allowed to expire at the end of the current calendar year. This will have a significant impact for fiscal year 28. On the expense side, we are projecting an increase of approximately $515,000 in salaries and fringe. This is driven by a 3% merit increase. Additionally, we have budgeted for a 7% rise in health insurance costs, reflecting the average increase observed over the past 3 years. We are also transitioning some contracted work in-house. After discussions with the directors revealed that this approach should be more efficient and effective. We analyzed the overall numbers and could reduce overtime. Taking that into consideration, we determined that hiring 4 enrollment specialists for our Health, Equity, and Outreach Department is a strategic decision that aligns with our goals. On the temporary staffing side, it's expected to remain flat. The contractual line item encompasses the call center, operations, marketing and outreach, and vendor contracted resources. We are proposing an increase of approximately $222,000 to this line item, primarily driven by ICRA marketing efforts and the Connecticut DRS check the box mailing. A little bit about that. In 2023, the Connecticut General Assembly passed Public Act 23-204, which granted legislative authority for Access Health to collaborate with the Department of Revenue Services on outreach initiatives aimed at informing state residents about health coverage options. As part of this partnership, the Connecticut income tax return, as you have most likely seen, now includes an option for residents to authorize DRS to share their information with Access Health. This enables us to connect with them regarding coverage options through the exchange. Consequently, the mailing costs for this outreach have increased. Moving on to the next line item, equipment and maintenance. This includes software licensing, system maintenance, and equipment purchases. We project an increase of approximately $461,000 attributable to the additional maintenance required for the new ICRA platform. Moving on to IT enhancements. This is proposed to increase by approximately $2.9 million to support the investment in our new enrollment system, referred to as 10 clicks. Over the past 3 years, we have diligently developed a plan to replace our current enrollment system, and we are now at the stage where we are ready to move forward with this project. The current system has become increasingly costly to maintain and update, requiring significant annual expenditures. The new system will be more secure, agile, and responsive to legislative changes, enabling timely and efficient updates as needed. Additionally, it is designed to significantly enhance the consumer experience, facilitating faster enrollment and delivering a seamless process overall. We anticipate that this improved experience will lead to increased enrollment, which in turn is expected to reduce call volumes to the call center, a positive outcome for both operational efficiency and customer satisfaction. Moving down to travel, we estimate this to increase because we can travel now more post-COVID, and travel has also become much more expensive. Finally, the other administrative line item is increasing by roughly $35,000. And this line item includes a bunch of items, including rent, insurance, utilities, staff development, office cleaning, and professional subscriptions. That was a lot. Does anyone have any questions on this slide?
Holly, this is Claudio.
Yes.
Couple things I'm hoping, and you did a great job of explaining this to me in our prep, but just for purposes of the rest of our board members here, can you talk through the point that you made about how potentially the Inflation Reduction Act subsidies going away will decrease revenue, but have a delayed effect and not hit us right away? And you talked previously about how the assessment works, and it's always running on arrears, basically at a point in time that is prior. So we're always capturing the fee on a book of business that was assessed earlier in time. So there's going to be a lag before those changes materialize into our budget. But can you just elaborate for the group here?
Yes, certainly, Mr. Gutierrez. I think I'm going to call out on Susan in legal, just because she works more closely with Wakely. And I think she may be able to give the group a better understanding of how those 2 years lapse and how it affects us.
Sure. And thank you, Claudia. This is a great question. We assess for a full year. So our assessments that go out each year in January are for that full year. We give carriers options to pay in different installments, but it's the assessment for the whole calendar year. So the assessment invoices are all done in December to go out for the upcoming year. At that time, the full year data that is available to look at is 2 years in arrears. So that's why it's not, that's the only reason. It's just that's when the full year data. So like the 2024 data obviously wasn't available for 25. So the data that was available full year was 2023. So that's where the lag comes in.
Excellent. Thank you, Susan. Appreciate that.
Thank you.
One more question, Holly, that I'm hoping you can answer is with respect to the significant amount that we're putting in the new enrollment system. It sounds like that's a capital investment, something that would have a useful life beyond just the budget year. Was there any reason why we chose not to capitalize that and stretch out the expenses as a capital asset over the life use of the IT system?
Right.
Instead of taking it just as a one-time cash pay.
Hey, Cody, if you don't mind, let me answer that one because we're not borrowing any money at all. We're using operating funds to pay for it. But we do capitalize it after the project is done. It's capitalized, and this project will spread over at least 2 years. So it's not going to be all because we don't actually we're putting RFP out to bid, and sometime early summer, and it's going to be a 2-year project, so it's going to be funded over the next 2 years. But it is capitalized after the project is done. It's capitalized and it's depreciated over time for record keeping purposes. But because we are not using funding from bonding or any other sources, it's hard to capitalize it on the front end because we're actually using operating cash to pay for it. but it will be capitalized once it's done, as we do with all of our projects. And obviously, we work very closely with our auditors to make sure we are accounting for these appropriately. I hope with that, Dan, did I answer your question?
Yes, thank you, James. Very helpful. That concludes my questions. I don't know if others want to pause to see if any other board members have questions. I'm seeing no hands or chat messages. So Holly, please proceed.
Thank you. Thank you. Next slide, please. Our fiscal year 2026 proposed shared cost budget with DSS is increasing by approximately $500,000. Our call center costs continue to rise, driven by increasing minimum wages, inflation, and higher IT maintenance expenses. As the largest line item on our budget, we remain committed to mitigation efforts. DSS and Access Health are working collaboratively to enhance call quality and reduce wait times. Thanks to the recent RFP process, our new call center contract has successfully kept costs at bay for now. While we continue to leverage available technology, these costs have also seen an upward trend. We will persist in working with DSS to explore ways to reduce IT maintenance costs without compromising our IT security. Next slide, please. We are projecting to end fiscal year 25 with approximately $19.5 million in reserves, which equates to 6.3 months of operating funding. Our goal is 9 months, so we will have reached 70% of our goal by June 30th. Next slide, please.
So, Mr. Chair, I think at this point, maybe we should go back to the vote for the minutes.
Yeah, this is Claudio again. Just seeking some guidance from Susan. I heard her say that we had to have 3 voting members. There's Matthew's joined. So
Sorry, I'm with you.
No worries. Perfect. You came just in time.
Thank you, everyone, and thank you, Matt. I really appreciate everyone's patience.
So we completed the substantive part of the meeting, and we're going to go back and take the series of votes. The first vote will be for the meeting minutes of November 14th, 2024. Do I have a motion?
Tom McNeil move the minutes be approved.
Thank you.
Matt Brockman.
Thank you. Moved and seconded. Any discussion or requested changes? Seeing none, the administrator will take the roll, please.
Claudio Gualtieri,
Yes?
Matthew Brockman,
Yes.
Thomas McNeil,
Yes.
Andrea Barton Reeves, and Miriam Miller.
Yes.
Thank you.
Our next vote will be for approval of the FY 2026 proposed operating budget as presented by the exchange. Do I have a motion?
Tom McNeil move approval.
Thank
Matt
you.
Brockman second.
Moved and seconded. Any discussion? Seeing none. Mr. Administrator, can you please call the roll?
Claudio Gualtieri,
Yes?
Matthew Brockman,
Yes.
Thomas McNeil,
Yes.
Andrea Barton Reeves, and Miriam Miller.
Yes.
Thank you. I think, Mr. Chair, there needs to be a vote taken on the fiscal year 2025 third quarter budget report.
All right, thank you. So our next item is for requesting a motion to approve the FY 2025 third quarter budget report as for operating as presented by the exchange staff. Do I have a motion?
So move, Tom McNeil.
And a second?
Second, Matt Brockman.
The motion is properly moved and seconded. Any questions or discussions? Seeing none, we'll take a roll call vote on that one as well.
Claudio Gualtieri,
Yes?
Matthew Brockman,
Yes.
Thomas McNeil,
Yes.
Andrea Barton Reeves, and Miriam Miller.
Yes.
Thank you.
I think that's the only other vote we have to take then is the motion to adjourn. Is that right?
Mhm.
All right, so I'll entertain a motion to adjourn.
So moved, Tom McNeil.
Second, Matt Brockman.
Second. All those in favor will signal yay by roll call.
A roll call. Claudio Galtieri,
Yes?
Matthew Brackman,
Yes.
Thomas McNeil,
Yes.
Angie Barton Reeves, and Miriam Miller.
Yes.
Thank you.
All right, thanks, everyone. Appreciate it. Have a
Thank
good day.
Thank you all.
Bye.
Thank you.
Thank you.
Thank you, everyone.